I want to talk markets with Brenda Vingiello of Sandhill Global Advisors. She's also a CNBC contributor. Brenda, this move, what's the takeaway? Is this some kind of all clear sign? Is this some kind of sign that the Fed is actually not going to raise interest rates at all? That 25 basis points is okay? What do you think the signal is here?
Well, I think a lot of the move we've seen, even last week and this morning too, is this rotation back into the large cap tech group, which had been such a big underperformer last year. I mean, I think this year what we've seen as the rates have come down, which rates had been such a big had such a big impact on valuation multiples and questioning just how much should we pay for these companies. Now that rates have come down a little bit, I think that's been a positive for the group. Also, just their lack of exposure to small banks in general, I think is another reason that investors have been rotating back into this group. But I think whether the Fed raises or not this week is still a big question mark. I don't think we're going to know until Wednesday. We are of the view that they probably shouldn't, given that we think the impact from having the second and third largest bank failures in history and maybe a fourth one on the way with First Republic, we're not sure yet. But that's meaningful in our view, and that's reason to at least pause for now and potentially pick things back up in May if we don't see inflation continuing to improve.
Right.
But I think it's still a big question mark.
Well, first of all, let's hope that First Republic does not go the way of the other banks, though, of course, I imagine, and just we've reported that they're looking for more capital, of course, no question. But in terms of this idea that all of that's deflationary, if, for example, Jay Powell were to come out and say, you know what, we're not doing anything, right? We're no interest rate hike. The market takes that positively, or the market takes that negatively and says, oh, goodness, maybe there's actually, a bigger, tougher slog ahead than we even thought.
Well, I think we've already digested a lot of bad news with bank failures happening. And I can tell you, I'm a little biased. We are based in the San Francisco Bay Area, and there has been a lot of uncertainty about banking relationships here that we have been dealing with clients. But I do think, I know there's a call out there that's saying that if the Fed pauses, that's going to raise more eyebrows. But I think it'll be, in my view, I think it'll be an acknowledgement that we have been seeing some significant impact from interest rates rising as quickly as they did last year. And perhaps it's wise to at least pause for a period of time here.